Welcome to Watch to Get Rich. If you're here, it means you're ready to take charge of your financial future and start building that wealth you've always dreamed about. Today, we're diving into the exciting world of investing, breaking it down into bite-sized pieces that are easy to understand. So grab a seat, maybe a notebook, and let's get started. First up, let's tackle the basics and the philosophy of investing. You might be wondering, what's the point of investing? Well, the simple answer is to make your money grow. Picture this. You've saved up $1,000. You could tuck it away under your mattress or leave it in a checking account. But here's the kicker. Inflation is silently eating away at that cash. Imagine you can buy a brand new MacBook Air today for $1,000. Fast forward 5 years, and that same laptop might cost you $1,200. Suddenly, your savings are worth less and less. This is where investing becomes your best friend. When you invest, you're putting your money to work so that it can outpace inflation and help you build wealth. There are two main ways investments grow, through income generation and appreciation. Let's break this down. Income generation is like owning a rental property. You buy a place, and every month you collect rent. That's steady income right there. On the flip side, appreciation is when the value of what you invest in increases over time. Think about it. If you buy a property for $250,000 and a few years later it's worth $400,000, that's a significant gain. Let's consider a real-life example. Meet John, a nurse from New York. Back in 2015, he purchased a duplex for $250,000. Fast forward to 2023, and he's not only been earning $1,500 a month from rental income, but his property has also appreciated to $400,000. That's the beauty of investing, earning income while watching your investment grow. If you like the content I share, please do not hesitate to give me a like, share, and subscribe button so that I have more motivation to bring you more attractive and practical content, accompanying you to achieve financial freedom and wealth. Now let's talk about stocks and shares, which are often the first thing that comes to mind when people think about investing. So what exactly are stocks? When you invest in stocks, you're essentially buying a piece of a company. Let's take Apple as an example. You can't stroll into Apple's headquarters and buy a chunk of the business, but you can use a broker, an online platform like Vanguard or Robinhood, to purchase shares. When you own shares of Apple, you benefit in two key ways. First, through stock price increases. If you buy Apple stock at $150 and it climbs to $200, you can sell it for a profit. Second, some companies like AT&T pay dividends, which are like rental income for stocks. Here's a relatable story to illustrate this. Sarah, a teacher in California, started investing just $100 a month in an S&P 500 index fund using Vanguard back in 2017. Fast forward to 2023, and her modest contributions have blossomed into a portfolio worth over $10,000. How did she do it? The S&P 500 tracks the performance of 500 of the largest U.S. companies, offering diversification and capturing overall market growth. Warren Buffett, one of the greatest investors of all time, often advises beginners to invest in index funds. Why? Because instead of trying to outsmart the market, you're investing broadly and letting the power of compounding work its magic. Now, I know what you're thinking. What about those common fears surrounding investing? It's completely natural to worry about losing your hard-earned money. What if the market crashes? What if my investments go to zero? Here's the truth. Markets do fluctuate, but over time, they tend to grow. Take the 2008 financial crisis, for example. If you had invested $1,000 in the S&P 500 right before the crash, your portfolio would have plummeted to around $400 at its lowest point. But if you held on by 2013, not only would your investment have recovered, but it would have grown significantly. Let's look at Mike, an IT professional from Texas. He invested $10,000 in 2006. When the market crashed, his portfolio dropped to just $5,000. Friends urged him to sell, but Mike stayed the course. By 2021, that same $10,000 investment had skyrocketed to over $40,000. The lesson here is clear. Don't panic. Investing is a long-term game. Now, for those of you who want to speed up your wealth building journey, Let's explore what I like to call fast lane investing. While traditional investing can be effective, it's often seen as the slow lane. Save, invest, and wait decades for significant returns. But there's a faster route. First, consider investing in your skills. Take Emma, a barista in Seattle. She spent $300 on a barista certification course. Within 6 months, she landed a head barista job, doubling her hourly wage. That $300 investment paid off in weeks and continued to boost her income for years. Next, think about investing in your own business. Jason, a web designer in Florida, took a leap and invested $1,000 to start a freelance business. He used that money to build a portfolio website and run online ads. Within a year, he earned over $20,000 from freelance projects, a staggering 20 times return on his initial investment. Business opportunities often yield higher returns than traditional investments. While the S&P 500 averages a 7% annual return, your skills or business could generate returns of 100% or more. So what's holding you back from investing? I encourage you to share your thoughts in the comments below. Let's talk about your fears, your aspirations, and how we can work together to overcome them. Thank you for watching Watch to Get Rich. Don't forget to like, subscribe, and share this video with anyone looking to build their wealth. I can't wait to see you in the next one.